Hey guys, Jen Henry here. Very interesting price action today coming off of a nice weekend. Beautiful weather by me. Hopefully it was by you as well. But we opened up this weekend with this gargantuan gap lower here on crude oil. And that massive gap lower was met with some initial selling pressure. Now, when you get a gap this large, it's really hard to ignore the price action that follows. Because think about it, right? We closed last week at 41.75. And then we open all the way down here at 40.07. It's almost a $2 gap lower, where everyone that was in long potentially last week Friday on that relatively range bound day, all of a sudden they're down $2 out on their position that they really weren't expecting, right? Very strong move lower coming into this week on crude oil. So you're going to see a lot of folks that just exit their trade, right? If they're buyers, they're going to close out and become sellers so that they can try to get it, just get out before it gets any worse. And that's where you get that initial push at the start of the candle. Now, knowing that we're that far down, we have a bunch of areas of support and we see a very weak close. We can see that, although there was likely a lot of selling pressure when we opened up, the buyers began picking away at it. We followed it up with another small little kind of inside bear bar. When it tried pushing down, the buyers picked that up as well. The issue from the buy side, though, is when they finally started getting some momentum, then we started seeing the sellers take it off the high. So now we started looking like a range, right? We're looking to buy low, we're looking to sell high, and pretty much assume that every breakout is a failure. So now we drive back down to the lows, the buyers buy the lows once again. And all in this one candle, it pushes back up and hits those highs, and there will be sellers who are selling the high of this move. Now, what's the problem for the sellers here? We have a massive bull candle. It engulfs entirely pretty much all of the morning session, aside from maybe a tick on the bottom. So a massive bull sentiment came into the market right here. That's a statement candle. That's the type of candle where the buyers are saying, hey, you guys need to wake up and you need to get out of the short side because we're going up at least for a little bit, if not for a decent amount of time, as you can see from the rest of the day's movement. So that is a type of candle where if you were short, you need to immediately exit and get into the long side, knowing that you're going to get a continued drive. We further saw it followed up with more continued pressure here from the buyers, showing that that breakout was indeed successful and they were planning on holding it. The sellers who were trying to sell those highs all the way up, knowing that they were wrong, try selling some more, and they weren't even triggered into the trade below that bear candle. That is a huge clue. The bears aren't even allowed into the move to even try to get out. That's a really big sign from the bulls that we are not done yet. And they turn up into a massive bull candle again. These sellers are probably thinking, crap, I am on a really wrong end of this trade. I need to liquidate my position. They buy back their positions as well. And then we have a flurry of buy pressure all the way back up. Another beautiful buy right there to ride the correction back higher. Now we come to the moving average, and this is where a lot of sellers are thinking, wow, massive gap lower. We have a big correction on the morning. I'm going to look to try to sell the moving average. And they would have gotten at least a little bit of a scalp. Not very much follow through, though, as you can see with doji reactions. Strong bear goes into a bear and then goes nowhere, right? So we know that there are a lot of sellers that are getting into positions here, whether it's at the moving average, trying to sell the highs as failures, whatever they're doing, they're trying to get into a position inside of here. And we try to turn down, and in this bear candle and this bear candle, they're met with a tiny little bull and then this guy right here. Now, when you're looking in context, right, do these bear candles look like they can be taken back with this bull candle? No, not a chance. But this candle? Yeah, that's a little bit of a bigger problem for the sellers. The sellers are not going to want to hold through something like that and will likely try to exit where they can and begin looking in the opposite direction. They try to turn down one more time, very weak bear candle, and that puts the nail in the coffin. The sellers know they're in the wrong side and they liquidate the position once again. Selling the entire way up. They've been wrong every single time. The buyers know that. They jump into the move on that little bar right there and rocket that thing higher. Now, if you missed buying this candle, you didn't like how it closed, there's your statement candle and another reason to get into that move to finish off that drive up for a beautiful morning drive, almost all the way up to Friday's close at 41.75. Huge run higher on crude oil here from the bottom, and now we're starting to see the sellers take right back over. But just some gorgeous examples of knowing that one side is on the wrong end of trade and using their stops to our advantage to get those trades going in our direction. So that's going to do it for this. Hopefully you learned something. Hopefully you found it interesting, and we will see you all next time.